There's a couple of reasons just to be a little bit careful about this market right now, just simply from the function we've gone very far from those April lows. There were a lot of people that were trapped. That retail investors are getting very, very bullish here. And while we've seen a lot of short covering pressure on hedge funds, they're still operating on the defensive side, and CTAs, which are the computerized trading algorithms, their exposure really right now is for more selling rather than buying. So this is what you need to know before the bell this morning. So markets rallied a little bit yesterday, kind of bouncing off the 20-day moving average. And again, just, we had this big concern over the weekend about Israel, this whole World War III headlines everywhere over the weekend. We expected coming out on Monday, it was like, oof, this is going to be kind of a bad day for the markets. Nope, not at all. Retail investors heavily bought the dip yesterday, had a nice rally. This morning, futures are pointing a bit lower this morning. Really, news flow hasn't changed much at all over the last 24 hours. I mean, we still have attacks going back and forth between Iran and Israel. So I'm not sure what the excitement was yesterday for the stock market, expecting a quick resolution of this. That was kind of the only explanation. Oil prices fell and stock prices rose. So we saw a big reversal in that fear trade from the weekend. But nothing's changed. And so this morning, we're starting to see the market kind of pull back again this morning. Oil's down, oil's up, gold's down. So it's kind of a bifurcated trade this morning. But again, really when we step back from it all, and again, we talk about narratives and we talk about headlines, and it's like, okay, this is why the market's doing this today. It's because of Iran and Israel, or this is doing this today because of what Trump said, whatever. Really, though, the reality is that we've had a very big run here, and the market, while it's trying to still advance here, the bulls are still trying to drive this market higher. They're starting to really struggle to do so. We're starting to see momentum slow down here a bit. We are, kind of running along this 20-day moving average, but the deviation above the 50-day moving average, which is this lower moving average that's still below the 200-day moving average, so we're still technically on a death cross right now for the markets. Got a big gap here for the 50 days, so that's kind of acting like gravity. So that's slowing the ascent of the market here a good bit. Now, because we've had such a very big run, and I need you to pay attention here for just a second, because when we finished up the first quarter, right? So the first quarter was March 31st. Here's April. So we finished up the first quarter with this 10% decline in the market. We then had this big drop off in the very first part of April. So April 6th was the low here for the markets. We've had this massive rally from April the 6th to June the 16th. This is the second quarter for the markets. Now, what's important here is that that equity advance has gotten pension funds offside. So there is potentially, and I'm not saying this is an absolute certainty, so just be careful. But as we move into the end of the quarter here, which is just 2 weeks away, we talked about losing stock buybacks here recently. So those started fading out on Monday. The window starts to close for buybacks was this past Monday. That's going to become more aggressive as we go through the next 2 weeks. But as we get into the end of the month, if pension funds are offsides, and it looks like they are right now just from positioning and balancing, that there are offsides in terms of equity exposure versus bonds, because bonds haven't really gone much of anywhere. So equity prices have risen, bond prices really haven't gone anywhere, which gets them to be overweight in their equity position. So we could see some additional selling pressure coming into the market as we get closer to the end of the month. We'll see what happens. But again, there's a couple of reasons just to be a little bit careful about this market right now, just simply from the function we've gone very far from those April lows. There were a lot of people that were trapped. That retail investors are getting very, very bullish here. And while we've seen a lot of short covering pressure on hedge funds, they're still operating on the defensive side, and CTAs, which are the computerized trading algorithms, their exposure really right now is for more selling rather than buying. So there's some potential as we get over the next couple of weeks. We could see some more choppiness and sloppiness in here. So just be a little careful with your allocations as we get into the end of the month, and then we'll just kind of readjust from there. That's what you need to know before the bell this morning.